Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome to another exciting episode of the What Matters podcast. I'm your host, Mike Mershazadeh.
And I'm Ashley Ward.
And today we're honored to have our special guest joining us, Brian Goodstadt, Managing Partner and Chief Investment Officer at Wealth Advisor at Paragon Capital Management in Denver.
Brian, with your extensive experience in the investment industry and your commitment to building personal connections with your clients, we're eager to hear your story and insights. Thanks so much for joining us today.
Happy to be with you.
Well, let's dive right in. So, Brian, you have had a remarkable career spanning over 30 years in the investment world. Can you share with us and our listeners a little bit about your origin story and your journey that really led you to where you are today as a managing partner at Paragon Capital Management?
Sure, no problem. So after getting my MBA from Columbia Business School, I spent about a decade or so in equity research and investment management, working for a hedge fund and another institutional investment management company. And then I'm from New York City, and that's where I'd been. And then I moved out to Colorado in 2002 and joined a small hedge fund, worked there for a couple of years, became co-portfolio manager. And then interestingly, I joined Paragon Capital in January of 2005, so coming up on 20 years. And when I joined, I actually joined to start a hedge fund for their clients. And so that was kind of interesting. And we did that for a couple of years. We created this hedge fund, and it was really just designed to be almost the anti-hedge fund, a conservative, no leverage type of hedge fund. But after a couple of years, we realized I think we couldn't really raise much money for it. So we decided to shut down that fund. And the two Paragon owners and founders asked me to stay on and start working with clients as an advisor. And so just going back, Paragon was started in 1990. So in January of 1990, so they're coming up on 35 years. And really they were one of the early fee-only investment advisory firms out there. And so when they asked me to stay on, and we'll shut down the hedge fund, but I'll start to become an advisor and work with clients, I jumped at that chance. I think what I learned was the hedge fund world is so short-term focused, and it's all about your recent performance. What have you done for me lately, kind of a thing. And I thought that's no way to build a long-term business. So I wanted to have more relationships with clients and focus on the long term and even move beyond just investments and do other things, tax planning and other things, which at the time I didn't know much about. But so that's really, the 30,000 foot view of where I came from and how I ended up as an investment advisor at Paragon.
Wow. And so tell us a little bit about Paragon there. You guys have grown to over $1 billion of AUM. Talk to us about when you got to the firm, what size was the firm, and how's the growth been, and how have you gotten there since in the last 2+ decades?
Yeah, so I don't remember the exact size when I started, but it was probably about half of what we are now, about $500 million. And we've grown to about $1 billion in assets. We have about 170 clients, and we're only 5 people, so we're a very lean firm. I think most advisors with $1 billion in assets will have a whole lot more people. So we get to do a little bit of everything, which is fun. So most of our growth over the years has been strictly from client referrals and just word of mouth. We've never been a big marketing shop. We're just now trying to ramp that up ourselves. But we still find that referrals from happy clients is the best way to build a business. And so the size of the firm, people-wise, hasn't changed in my 20 years. So we actually have 4 advisors and then just one back office person who's our office manager and client services associate who does kind of everything else. And so that's how we do things here, a little bit differently.
Wow.
Wow. So are the 4 advisors when we were talking earlier, the 4 of you guys that are owners there?
Yeah, so we had 2 founders, Alex and Henry, as I said, back in 1990. They were 50-50 partners for many years. And when they decided they wanted to think about retiring, maybe 4 or 5 years ago, we all got together and put together an internal succession plan. So the 4 of us advisors here started gradually buying in from them over the last few years. So we came up with our own buy-sell agreement and valuation, and we really came up with something we thought was a win-win for everybody. So we've been buying in. They're still significant owners of the firm, and although they've completely stepped away from the day-to-day operations, but they're still on our board. And so, I think at the time they were thinking of retiring. They thought about selling the firm, and even spoke to a few companies. I think they even got an offer to sell the firm, but they decided they thought it would be best for us existing employees and for our clients to just have an internal succession plan, even though they're giving us quite a discount to the market value. So they could have gotten more money by just selling the firm, but it was really more about their legacy and keeping the firm going and doing things in a way that they thought was best for us and best for the clients.
Really cool.
And with only 4 advisors at the firm, I imagine that you all have very extremely close-knit relationships with your clients. Over the years, Brian, what would you say are some of the most valuable lessons at building client relationships and managing assets that you've learned throughout your career? Any advice you could give to aspiring advisors really looking to navigate the wealth management world, going independent, working for a smaller RIA, and really making their path to success there?
Yeah, one of the interesting things we do here is we intentionally limit the number of clients we each work with. So I think the most any of us work with is 50 clients. So we really get to have time to spend to get to know our clients. So maybe half of our clients are in Colorado and half are spread around the country. So we'll travel to go meet with clients. Can really get to develop a personal relationship. One of my clients I ski with regularly. I have other partners here that might golf with the clients. So we really get to know them. And then in terms of actually meeting with the client one-on-one, I think one of the most underrated skills is listening skills. I think, many of us, we get a CFA or CFP, and we have all this knowledge that we want to share with the client. So you tend to want to just talk during the entire client meeting. But I find it's important to reverse that and have the client talk more. So I tend to ask more questions about them. It really helps you get to know them better, but it also helps them feel like you're really getting to know them and paying attention. So I think just trying to step back and just not talk so much and listen, I think that really helps. And then, if I think back to, these relationships we've developed, one of the main lessons I remember from when COVID first hit, back in March of 2020, everything shut down. We all went home to work from home, and my partners, we all had a call that Monday morning. And we said, what, we need to contact every client, this week. Let's call them, not email. Let's really call them. And when I called a lot of them, the initial questions I got from them, it wasn't, boy, how's my portfolio doing? How much money have I lost? It was more, how are you doing? How's your family? And that really kind of stuck with me that, wow, we really do have relationships here. So I think that really helps. And I think that's why getting new clients through referrals is so much better they're much more sticky than just getting a random new client from, say, a cold call or some other marketing service. Really helps.
Absolutely.
So when you said there's only 50, that each of you guys only manage around 50 people, I take it the average client has a pretty high net worth with you guys.
Yeah, I think we have about 170 clients with $1 billion in assets. So whatever that averages out to, 6 million or so per client, ranges from $1 million to 50 or maybe even $100 million. I think many of our clients have been corporate executives and some entrepreneurs. Many of them are retired corporate executives now, but so many of them have done well on their own. Without us, they've just done well in their careers and made a lot of money that way.
Real cool.
And I'm curious if you'd be open to sharing with us a specific client story. It can either be one of your clients or one of your other advisors' clients from Paragon that really you think reflects the values and impact of your firm's approach and the significant impact you've had on your clients' lives.
Sure. Let's see. I'll mention one example. So we have one client who is CEO of a large public company, and one of the things we like to do here is we like to just take on interesting special projects with clients. So in this case, it was a client that was negotiating to become the CEO of a big company. We helped him negotiate his compensation package. It's not something that's typically in our services provided list kind of a thing, but it was just an extra opportunity to help with the client. And so we really spent a good number of weeks and even months really researching what the CEO of that kind of company should be getting paid in terms of stock options and restricted stock. And we helped him, speak with HR every day and really negotiate his pay package. And he ended up with a significantly higher pay package than he was first offered. So that really helps. I'll throw out another one. Just we like to really get involved with our clients' taxes. We do a lot of tax forecasting, tax planning, and I remember one of my first clients, many years ago. He came by the office. He dropped off his tax returns since he had just filed it, and so I looked through it, and I noticed there was such a huge mistake that they paid an extra $120,000 in taxes. So when I called him and told him, he almost couldn't believe it, and probably thought I was crazy. But he said, "Hold on, I'll call you right back." He called his CPA, called me right back. He said, "Oh my God, you are right. This is amazing." And so he, it was one of my first. I think he actually was my first client, and to this day he still jokes around every year and says, "Okay, here's my taxes. Find me another big mistake," which of course I'll never find one like that again. But I just never know what's going to happen.
Yeah.
I wish I wish my advisor was able to do that for me.
Wow, that's neat. So, Brian, as a leader, and you're also a past president of the CFA Society of Colorado, how do you inspire and motivate your team and peers to uphold the highest standards in the industry?
Yeah, I think some of it is just leading by example. So everything we do here is with the utmost ethics, and with the CFA Society and CFA Institute, it's ethics is very important, but it's not just lip service. It is very important. So I also volunteered with the CFA Institute's disciplinary review committee, which reviews CFA charter holders who have been accused of some wrongdoing of some sort, and we had the power to revoke or suspend their CFA charters. So we take those things very seriously. And so again, part of it is just leading by example, and just one of the things that one of our founders, Alex, always instilled in us from day one is just no matter what, just always do the right thing for the client. So really try not to think of what's in our best interest. There are always ways to boost our revenues at the expense of the client, but it's always just do the right thing for the client. And in the long run, things will work out in our favor anyway. And so part of it is just playing the long game and not being short-term focused. So if you do the right thing for the clients, it'll work out well. And that's really the key thing we try to do here.
And moving forward, what do you see as the future of Paragon? Where do you guys, hope to be in the next, or what's the goal to get to in the next 5 to 10 years from right now?
That's a good question. We have one of our advisors who will probably be transitioning towards retirement himself over the next few years. So we'll probably hire another person to replace him. We've typically just grown organically that way. I think at some point we'll probably have to hire more people to take on newer clients I think 2 years ago, we only had about 150 clients. And now we've grown just suddenly to 170. And so if this growth continues, then we're kind of at capacity where we are. So we'll need to keep hiring. So that's one thing we'll have to do. And then, in terms of running the business, we try to keep a lot of the lessons our two founders always instilled, which is, the ethics and doing the right thing for the clients, but we're also trying to make a lot of changes to the business. And we're trying to do things a lot more efficiently, adding more technology. We'll see where AI takes us, but I think there's a lot of opportunities to just be more and more efficient. So we'll continue to do that as we grow.
Well, thank you.
And you mentioned AI. Artificial intelligence is impacting numerous industries. How do you see AI influencing wealth management, particularly in areas like portfolio management, financial planning? Do you think it's going to impact this industry for the better? Do you think it's going to be utilized? Any thoughts on that?
Yeah, I think it will have a big impact. I think it'll be mostly a positive impact. I think what we're seeing so far is it's being used more for things like efficiency, being able to be more efficient, and also for things like investment research. So in terms of efficiency, for example, we just started using this AI note-taking app. So for calls like this or any client calls, or if I talk to a mutual fund company, the AI note taker is listening in and recording the call, and it takes really good notes. It really can understand what are the key points from the call. And so as soon as the call ends, it sends me a summary. Here are the key points that were discussed. Here are a few things that need to be followed up on. Here are things I need to follow up on. Here are things the client might need to follow up on. So that's really good. And then it automatically links to our CRM software. So we have a record of all these meetings. And so then I think, years down the road, when we have a whole database of all these, it'll really be a helpful source of information. I think that helps. I don't think AI will take away the need or the importance for the human connection. As I discussed before, the relationships are important. A lot of clients just call just to say, "Hey, what do you think about the markets?" And they just want to have someone to talk to and talk through issues. So I think AI could be used as a tool to help us research certain issues, but not to really replace what we do.
Yeah, I'm curious because all the different AI technologies. There's so many. I'm curious, what's the note taking one that connects directly to your CRM that you love?
It's called Jump.
Okay.
It's a fairly new company. It started fairly recently, and we tried a couple others, and I just wasn't that impressed. The accuracy wasn't that good, and so I was kind of skeptical when one of my partners suggested trying this one. But I said, okay, I'll try one more, and I was quite impressed. It's very accurate, and it really does figure out what were the key points discussed. And it's designed especially for financial advisors, so it understands some of the jargon and the things we're talking about in these calls. So that really helps.
Fantastic. Good plug for everyone listening here.
Yeah.
So outside of your professional role, are there any sectors or investment opportunities that really excite you personally at the moment?
Yeah, investment wise, we are definitely a little bit against the grain. So we've been somewhat underweight the hot tech stocks for quite a while. We tend to invest in a globally diversified portfolio of very high quality, um, less speculative assets. So, and those were really out of favor for the last couple of years, but they're now coming back in favor. So I think areas like international stocks, we have a pretty significant 35 to 40% weighting in international. Um, we've recently upped our weighting in small cap stocks. So both international and small cap stocks have dramatically underperformed
Yeah.
U.S. large cap space for over a decade, maybe 15 years now. And these things tend to go in long term cycles. And so it's tough to time them. I think we were too early getting into both of those sectors, but we tend to have a long term view. So if we look at it over the next 5 to 10 years, I'm pretty confident that those areas are going to do well. And the big tech stocks, they just can't continually outperform every day, every month, every year. At some point, they just get too big and collapse under their own weight
Right.
in terms of valuations. So, so we're diversified that way. And similarly, on the bond side, we tend to be more high quality bond focused, and we don't tend to just reach for higher yields and lower quality type of bonds unless spreads get really attractive. Then we might temporarily do that. But right now, we're kind of sticking with very high quality investments. So we feel good about where we are. We think that will help us not only have some good upside as these trends reverse over the next many years, but they also help on the downside. Um, Typically, our portfolios do a lot better than the market in big downturns. And that's generally what our clients want. As I mentioned, many of our clients made a lot of their money in their corporate careers. We're not here to make them rich and wealthy. We're here to invest prudently, make a good, decent return, and not lose their money.
Mm-hmm.
Mhm.
And what I always like to wrap up with here is, what do you feel the overall view of the economy is? We've had so much change going over the last few years since COVID. The interest rates, I recently noticed yesterday that the 10-year was back down in the mid threes, which I thought was kind of exciting. I just purchased a house, and I got a 5% interest rate, so I felt like that was a win. But what do you think is going to be taking place over the next few years? Do you think the interest rates going down could just be something because it's an election year and we're getting close to the election, or what do you think is going to go on there?
Yeah, well, I think look back a year ago, everybody thought for sure we'd be in a recession at this point, and clearly that has not happened. But I like a term I heard someone mention called the vibe session, which is that there's this disconnect between a pretty good economy and people's perceptions of a terrible economy. So that's kind of interesting to see how that plays out. But for now, I don't think we're heading into a recession, but the economy is perhaps starting to weaken a little bit in terms of employment, and that's why interest rates are starting to come down. Because the Fed raised rates so much over the last couple of years to fight inflation. Inflation has come down to close to normal levels, and now the Fed could start to cut back on rates a little bit. So that should help boost the economy a little bit. So I think that will help. And we'll see where things lead from the election, but obviously there could be some volatility around that, but it shouldn't affect the economy too much. It shouldn't affect the markets too much. Most people always think if my party doesn't win, it's going to be a disaster, but it usually doesn't happen. Usually the markets and the economy they do their own thing. And corporate earnings growth this year are expected to grow double digits, 10 or 12%. GDP growth for the third quarter is expected to be between 2 and 3%. So it's still a pretty decent economy at this point. And inflation's come down to close to normal levels. So at this point, we're just watching the employment situation. That's often the last thing to weaken before a recession starts. And we're seeing the unemployment rate tick up the last several months. They're still at pretty healthy levels, but definitely weakening. And that's something we'll have to keep an eye on.
Hey, I was talking to my brother about this the other day, and he was telling me that, we used to never take on, that we're averaging what a 1.5 or 1.8 trillion of extra debt that we've been taking on, and that's been something that's been going on for, in these newer cycles of, over the last, 7-8 years, as opposed to what had happened back in, 07, 08, 09. What's your feelings on that?
Yeah, I think no matter which party wins the White House or Congress, one thing's for sure is that our country's debt is going to continue to increase. There don't seem to be any real fiscal conservatives left in Congress like there used to be. And so I think both parties have different agendas and they'll get to higher debt levels in different ways. But both of them are going to lead to higher debt. Now, at some point, something's got to give, but we don't really know where is that limit. How high can debt go? It's hard to tell. We don't really know, but that seems to be the trend that's going to continue.
Thank you. I appreciate your insight on that.
Well, Brian, I think that wraps up our questions for today. Thank you so much for joining us on the show, sharing your story, your valuable insights and experiences with us and our listeners. It's been an absolute pleasure.
Thanks. It's been nice talking to you too.
And to all of our listeners, thanks for tuning in to another episode of the What Matters podcast. Stay tuned next time for more thought-provoking conversations. Until next time, take care. Thanks again, everyone.